Hi everyone, welcome to our channel. We are accounts bookkeeping business based in QLD, Australia. If this is your first visit to our channel, we would like to inform you that this video is part of full video series explaining GST Act 1999. If this subject is of interest to you and you would like to learn GST Act 1999 in easy and interesting way, please check our playlists for this subject. This is video number 4 of GST series. In this video we will discuss Division 188-1 to 188-40 from Chapter 6 Volume 2 of GST Act 1999. This section explains meaning of GST turnover. Please find this section in Volume 2 of Chapter 6 of GST Act 1999 from pages 159 to 166. There is link in description box. You can access free copies of GST Act there. We will discuss this video in following pattern. 1. A brief introduction. 2. Explanation of the ACT and relevant legislations. 3. Explanation in our own words. 4. Summary. 5. Review. 6. Key points. 7. A question and answer activity for you. Let's begin. This section is from Division 188-1 to 188-40 of Chapter 6 Volume 2 GST Act 1999. This section explains meaning of different GST turnovers, and GST turnovers can affect how GST Act applies to business. This section has about 12 different parts. Part 1 explains different GST turnover thresholds and how these thresholds affect the Operation GST Act. For example, registration turnover thresholds, tax period, cash accounting, electronic lodgement, small enterprise, annual apportionment, and installment turnover thresholds. This section will also explain all other relevant details to turnover thresholds. Section 2 explains whether GST turnover meets, does not exceed a turnover thresholds for annual apportionment, cash accounting, electronic lodgement, installment turnover, registration, small enterprise purposes. Section 3 discusses about current GST turnover in general, for members of GST groups. This section also explains about supplies that are disregarded. Part 4 of this section explains about projected GST turnover, in general, for members of GST groups and for suppliers that are disregarded. Part 5 discusses about settlements of insurance claims to be disregarded. Part 6 explains about reverse charged under Division 83 or 86, not to be included in recipient's GST turnover. Part 7 explains about supplies to which Subdivision 153B applies. Part 8 discusses about transfer of capital assets and termination of enterprise to be disregarded. Part 9 explains about value of non-taxable supplies. Part 10 explains about value of gambling supplies. Part 11 the value of loans. And last part is number 12 discusses about supplies of employees' services by overseas entities to be disregarded for registration turnover threshold. That's all we will discuss in this video. Friends, in this video we will investigate total 12 parts in GST turnover section, that is from Subdivision 188-1 to 188-40. Explanation from Act. Now let's see how GST Act explains this. Please find relevant information on screen. First section, explain purpose of Division 188. Division 188-5 explains turnover thresholds for GST registration, tax period, cash accounting, electronic lodgement, small enterprise, annual apportionment, and installment turnover thresholds. Please see on screen information from other relevant sections of GST Act in relation to turnover thresholds. Section 23-5 teaches about requirements for GST registration turnover thresholds. Section 27-15 explains about tax period turnover thresholds. Section 29 to 40 explains about cash accounting turnover thresholds. Section 31 to 25 and Section 33 to 10 explains about electronic lodgement turnover thresholds. Section 123 to 7 explains about small enterprise turnover threshold. Section 131 to 5 explains about annual apportionment turnover threshold. Section 162 to 5 explains about installment turnover thresholds. Friends, all the sections we just looked at also have some relevant clauses from Tax and Administration Act 1953. We will explain those in later section of this video. Now we will look at next section 188 to 10. This section explains whether your GST turnover meets, does not exceed a turnover thresholds. Division 188 to 15 explains about current GST turnover in general, for members of GST groups, supplies that are disregarded. Division 188 to 20 projected GST turnover, in general, member of GST groups, supplies that are disregarded. Division 188 to 22 settlements of insurance claims to be disregarded. Division 188 to 23 reverse charges that are not included in recipient's GST turnover. Division 188 to 24 supplies to which Subdivision 153B applies. Division 188 to 25 transfer of capital assets, termination of enterprise to be disregarded. Division 188 to 30 the value of non-taxable supplies. Division 188 to 32 the value of gambling supplies. Division 188 to 35 the value of loans. Division 188 to 40 supplies of employee services by overseas entities. Friends, that's all we are going to discuss in this video. Now we will explain this whole section in our own words. Explanation of turnover thresholds or limits, in other words. So, friends, firstly we will look at threshold for registration for GST under Section 23 to 5 of GST Act. Friends, just be clear that it is entity that carries an enterprise, not the enterprise required to register for GST. If a business makes more than $75,000 per year, nonprofits organizations required to be registered if they are making more than $150,000 per year. Friends, I will repeat, $75,000 for normal business, $150,000 for not-for-profits. However, these numbers are subject to change. Other thing to keep in mind that some businesses are required to register for GST regardless of their revenue in income year, such as taxi or limousine for passengers, and if you want to claim fuel tax credits for business or enterprise, etc. 2. For monthly tax reporting thresholds, in other words, if a business is going to report GST to Australian Taxation Office on monthly basis. Friends, this decision is reviewable decision by the Commissioner of Australian Taxation Office. In other words, Commissioner decides if a business is required to report GST on monthly basis based on these conditions. If a business is making $20 million or more in a year in Australia, if you are carrying business in Australia less than 3 months, or enterprise have a bad history failing to comply with their taxation obligations. In these circumstances mentioned before, Commissioner may decide for business to report GST on monthly basis. Dates for reporting is also a reviewable decision by Commissioner. However, dates specified must be January 1st, April 1st, July 1st, or October 1st. Other note to remember, friends, is that if any changes happen to the monthly reporting of GST requirements regulations, these changes will not apply to you straight away. These changes will be applicable to you on next reporting period. 3. Next is choosing to account on cash basis. A business may choose to account on cash basis if its business turnover or GST turnover is less than $2 million per year. For income tax purposes, you account for your income using receipts method, and if Commissioner determines in writing that cash basis accounting applies to a business. Just a side note, friends, under subsection 328-110, 4 of Income Tax and Administration Act 1997. A business making less than $10 million is considered as small business. Please keep in mind, just as we discussed before, to account for cash basis business overall and GST turnover must be less than $2 million in an income year. 4. Next is threshold for electronic lodgement. If your business turnover is $20 million or more in a tax year, you must lodge GST returns to Commissioner in electronic form. You can also choose electronic lodgement if you are making less than $2 million a year, but this is not a must. Please see Section 388 to 75 in Schedule 1 of Tax Administration Act 1953 for signing returns to Commissioner. Friends, lodging electronically means that GST return is transmitted to Commissioner in an electronic format. Few things to remember. If a business fails to lodge electronically and business turnover is $20 million or more, a penalty applies to you under Tax Administration Act 1953. If you must or choose to lodge GST electronically, you must notify the Commissioner all other BS amounts. Other BS amounts are anything else on BS form other than GST, such as PAYG tax withheld, PAYG installments, etc. ATO takes lodging electronically very seriously. 5. Now we will discuss about small enterprise threshold for applying simplifying accounting method as a small enterprise for GST purposes. Just to be clear, friends, we are not talking about accounting on cash or accrual basis in accounting. Don't get confused. In GST, there are 5 simplified accounting methods for GST purposes. Please go to ATO's website and search for 5 simplified accounting methods, or check our description box below. For your convenience, we have added the link that will take you there. 5 simplified accounting methods are business norms, stock purchases, snapshots, sales percentage, and purchase snapshots. You can choose to account with simplified accounting method if your GST turnover is less than $2 million and business turnover is less than $10 million in year, or if this is determined by the Commissioner. We will discuss more on choosing simplified accounting methods later in this series. 6. Now we will look at annual apportionment threshold to see if a business can make annual apportionment. To make annual apportionment, business must earn less than $10 million and GST turnover is less than $2 million in a year. Apportionment normally means apporting for private or business use. We will discuss more on this subject in other videos. 7. Installment turnover threshold is what we will discuss now. Friends, a business can elect to pay GST by installments if you are a small business entity. In other words, if your GST turnover is less than $2 million per year, or you do not carry a business and your GST turnover does not exceed $2 million. Current tax period applies to you, is not affected by monthly election of GST payment. You have GST lodgement record of at least 4 months. You have met all your GST obligations to Commissioner. You are not in net refund position, and you are not a limited registered company. Just a little explanation about limited registration company, in that these companies are not entitled to ABN number in Australia, such as Overseas Software Service Provider. Other note is that you are in net refund position if all your assessed GST amounts are less than 0. Finally, that was all for Division 188-5, an explanation of turnover thresholds. Just few notes about this section. This whole division is an explanatory section, means this is not an operative provision. Friends, if you don't know what an explanatory section is, please refer to video number 2 of this playlist. Explanatory notes are explained in depth in that video. Secondly, if any issue arises in relation to GST thresholds, please refer to GST sections or divisions mentioned inside the table. Thirdly, sections 3, 4a and 5 of Division 188-5 of Chapter 6. These sections are namely, choosing cash accounting method, annual apportionment, and paying GST in installments option. All these 3 sections only apply to you if you do not carry a business. Friends, let's have a quick look what we learned so far from Division 188-5. We have learned requirements for registering for GST, choosing monthly tax periods, cash accounting option, electronic lodgement of GST threshold, meaning of small enterprise for GST purposes, requirements for annual apportionments and choosing to pay GST by installments. This section is just an explanatory section. There will be more in-depth discussion about these subjects in future videos. Now we will discuss Division 188 to 10, whether your GST meets or does not exceeds your turnover threshold. Basically, this section is explaining there can be different types of thresholds for different types of GST turnovers. Friends, other thing is that commissioners should not be satisfied in opposite direction for both sides of GST turnover thresholds. For example, if a threshold is at or above certain GST amount, commissioner should not be satisfied in opposite direction that is below that amount. There are also GST turnover thresholds which are at or below certain amounts. It is very similar to what we discussed before. As we discussed in previous sections, all the GST turnover thresholds are different. Some are at or above a certain GST amount, and some are at or below certain GST amounts. These are some examples of different turnover thresholds: annual thresholds, cash accounting turnover threshold, electronic lodgement threshold, installment turnover threshold, registration turnover threshold, registration turnover threshold, and tax period turnover threshold. So, in other words, friends, all turnover thresholds will have different GST turnover amounts and structures. For example, for some of thresholds, GST amount will be at or below certain amount, and other thresholds would be at or above certain GST amounts. Now we will have a look at Division 188 to 15 and 188 to 20 of Chapter 6 of Volume 2. We will discuss current and projected GST turnovers. Please keep in mind there is not much difference between current and projected GST turnovers. Keeping this in mind will make it easy for you to understand current and projected GST turnovers. Firstly, we will discuss current GST turnover. Current GST turnover is the total of all GST for the applicable supplies at a particular time and month and supplies you are likely to make in next 12 months ending at end of the same month in next year. Supplies not included in current GST turnover are supplies that are not input taxed, not for consideration, and are not taxable supplies. Supplies those are not made in connection with your enterprise. Friends, current GST turnover for members of GST groups is almost similar. In general, current GST turnover only difference is that it applies to all the members of a GST group. Supplies that disregarded in current GST turnover are supplies those are not connected to Australia. Supplies those are connected to Australia because of Division 9 to 25, 5C of GST Act Volume 1. And GST-free supplies made by non-resident. Friends, now we will talk about projected GST turnover. Projected GST turnover is almost like current GST turnover. There is only one difference: that supplies you are likely to make in next 11 months to be taken into consideration, unlike 12 months for current GST turnover. Let's have a quick look what we learned so far from turnover section. 1. Current and projected GST turnovers are almost similar with very little difference. That is, instead of considering supplies you are likely to make in next 12 months, you take into account supplies you are likely to make next 11 months for projected GST turnover and 12 months for current GST turnover. 2. Everything else and very similar for members GST groups and entities in general. Only difference is these sections applies to the members of GST group instead of individual entity. 3. Not every GST supply is included in current and projected GST turnovers. Now we will explain Division 188 to 22 and 188 to 23 of Chapter 6. That is, settlements of insurance claims is to be disregarded and supplies reverse charged under Division 83 or 86 not to be included in recipient GST turnovers. Firstly, let's have a look what settlements of insurance claims to be disregarded for working out GST turnovers for both current and projected GST turnovers. All of these are to be disregarded. 1. Payment of money and digital currency by insurer settlement of claim. 2. Compulsory third-party insurance premium, election payment of supply by insurer and settlement claim. 3. Payment of money or supply by an HIH rescue entity. Friends, HIH entity means the HIH Claims Support Trust, the Commonwealth, a HIH company such as CIC Insurance. All these settlements of insurance claims to be disregarded for working out current and projected GST turnovers. Under Subdivision 78B, some settlements of insurance claims can be treated as constituting supplies by insured entities. Now let's have a look on Division 188 to 23 supplies reverse charged for GST turnovers. To avoid doubt, if GST on taxable supply under Division 83, that is non-resident making GST supplies connected with Australia, and Division 86, that is valuable metals. Both of these supplies, that is GST supply made by non-resident in connection to Australia and valuable metals supplies, to be disregarded for working out GST turnovers for both current and projected GST turnovers. Friends, let's see what we learned so far in this section. 1. Insurance claims can be disregarded while working out current and projected GST turnovers. However, some insurance claims under Subdivision 78B are to be treated as supplies. 2. Supplies made by non-resident in relation to Australia and on valuable metals are to be disregarded when working out current and projected GST turnovers. Now we will discuss Division 188 to 24 of GST Act, namely, supplies to which Division 153B applies. Friends, Division 153 of GST Act deals with agents etc. and insurance brokers. In subsection of 153B in this division, details about principals, intermediaries as separate supplies and acquisitions in relation to GST activities are explained. In working out current and projected GST turnovers, you may choose to apply taxable supply under subsection 153-55, 1. Supplies which you make as an intermediary. That is value of supply minus value of taxable supply. Friends, subsection 153-55, 1, states that a supply made by principal to a third party via an intermediary is to be taken as supply made by intermediary, not by principal. In later videos of this video series, principals, intermediaries and third parties will be explained in depth from GST Act. To stay updated, subscribe to our channel. Friends, in working out current and projected GST turnovers, you may choose subsection 153-60, 2, to apply to taxable supplies you make as an intermediary. That is value of supply minus 10 by 11 consideration of creditable acquisition. Friends, subsection 153-60, 2, states that intermediary is to be taken to make supplies that is taxable supply to the principal. Now, let's have a look on Division 188 to 25, namely transfer of capital assets and termination etc. of enterprise, to be disregarded for working out your projected GST turnover, not the current GST turnover. There is not much difference between them anyways. These supplies are to be disregarded in working out your projected GST turnover under transfer of capital assets and termination of enterprise. 1. Supplies made by transfer of capital assets of yours. 2. Supplies made solely with purpose to ceasing an enterprise. 3. Reducing the size or scale of an enterprise substantially and permanently. Now we will discuss Division 188 to 30. The value of non-taxable supplies. For the purposes of just this division, value of supply that is not taxable supply is to be taken as 11 by 10 of what would be value of supply if was a taxable supply. Now we will talk about Division 188 to 32, that is the value of gambling supplies. Simply put, for the purposes only of this division, the value of all gambling supplies, that is all gambling supplies that an entity makes during a particular period of time, is taken to be an amount equal to 11 times of the entity's global GST amount for that period of time. Let's have a look on Division 188 to 35, namely the value of loans. Any supply constituted by a loan of money or digital currency, any repayment of the principal, is to be disregarded in working out the value of the supplies. Finally, friends, Division 188 to 40, last section of this video, namely, supplies of employee services by overseas entities, to be disregarded for the registration turnover threshold. Have you noticed that this section is only specifically referring to working out GST registration threshold? In other words, supplies of employee services by overseas entities to be disregarded in working out if an entity qualifies to register for GST in Australia. Let's have a look what we learned from Division 188 to 24 to 188 to 40. 1. Principals making GST supplies to third party via intermediary is to be taken as supplies made by intermediary, not by principal. 2. Transfer of capital assets and terminations, etc. supplies are to be disregarded in working out GST turnover. 3. Loan supplies, repayments of principal is to be disregarded in working out the value of supplies. 4. In working out registration GST turnover threshold, supplies of employees by overseas entities don't count. Well friends, we are almost there. This is fourth section of this video. We will try to summarize what we discussed in this video so far from Division 188 to 1 to 188 to 40, explaining meaning of GST turnover. In summary, 1. In first section we have learned about different types of GST turnover thresholds and their legislative requirements, such as cash accounting threshold, electronic lodgements, etc. 2. We have learned that there are different types of thresholds and amounts. These amounts can be at, below or above certain amounts as mentioned in GST Act for specific thresholds. 3. In third section we have discussed about working out current and projected GST turnovers for individual entities and for members of GST groups, and supplies to be disregarded for working out these thresholds. 4. In all other sections we learned about what is to disregard in working out GST turnovers, such as insurance claims, loans, employee services by overseas entities, etc. Friends, at last, in fifth section about key points, let's have a look on some key points we gleaned from Division 188 to 1 to 188 to 40 of GST Act. 1. This whole section from Division 188 to 5 is an explanatory section. In other words, this section of GST Act is not an operative provision. To learn more about this, please watch video number 2 of this playlist. 2. It is the entity, not the enterprise, required to register for GST. 3. Commissioner of ATO decides about if monthly GST payments applicable to an entity. 4. Changes in GST regulations in current period applies to you in next period. 5. If you lodge GST electronically, you must report other BA amounts with GST such pay G. 6. If lodging GST electronically applicable to a business, failing to lodge electronically will result into a penalty. 7. Choosing simplifying GST method is not same as cash or accrual accounting. In GST there are 5 different simplifying accounting methods. To know more, please find link in description box below. 8. There is not much difference between current and projected GST turnover thresholds. The only difference is 11 and 12 months. 9. HIH entity means Claims Support Trust, Commonwealth, or HIH Company. That was it for this video, friends. Now we will head into 6th section. A question and answer activity for you. Answering these questions will improve your understanding of this act. You can use this video or GST Act Volume 2 from pages 159 to 166 to answer these questions. There is a link in description box below. For a free digital copy of question sheet, please feel free to contact us. Question 1. What is registration turnover threshold? 2. If you do not carry a business, what parts from Division 188 to 5 applicable to you? 3. What is difference between current and projected turnover thresholds? 4. What settlements of insurance claims to be disregarded in working out GST turnover thresholds? 5. What does Division 83 and 86 refers to? 6. 5 things to be disregarded in working out GST turnover thresholds. 7. Does supplies of employee services by overseas entity can be counted towards GST registration turnover thresholds? That was it for this video. If you have any questions in relation to this section, please don't hesitate to contact us. Please check out whole playlist about GST on our channel. Thanks for watching.